You can't control what the future holds, but you can take control of your investments with Principal. Whether your goal is to enjoy a comfortable retirement or to secure your financial legacy for future generations. After all, your future and aspirations are worth investing in. That's why we offer a wide range of fund options that gives you global and local exposure for better returns. With more than 142 years of global investment experience at your fingertips, you can take full advantage of opportunities to build your wealth. And we make it easier for you to manage your investments with our enhanced digital solutions. Now you can easily buy, redeem and switch your investments at your own convenience with our easy-to-use online investment portal. Never miss the right opportunities to invest with cash or iInvest. As you build your legacy and aspirations, we will be by your side to help you secure the future for you and your loved ones. Start taking control of your investments with Principal today.
All right. Assalamualaikum warahmatullahi wabarakatuh and very good evening, everyone. My name is Nazri. I'm your moderator for today. So thank you for joining us today. From time to time, we bring you a different discussion topic so that it benefits everyone, regardless of whether you are existing investors, new investors, or soon to be our investors. So today we have an interesting topic to discuss on investment opportunities with renewable energy by our expert presenter, Mr. Sean Ho. He is the portfolio manager of Principal Asset Management Singapore. So a bit of his background. Sean holds a master's in real estate finance from the University of Cambridge, and he joined Principal Asset Management Singapore in 2015 and currently manages the Principal Asia Pacific Renewable Funds with Darren Slims as the co-manager. He also managed China, India, Indonesia Opportunities Fund, as well as other segregated mandates. So he has over 9 years of experience in the financial industry. Prior to join Principal Singapore, he was the special officer to then CEO of CIMB Group, Datuk Sri Nazir Razak, where he gained regional and broad-based exposure to various parts of the bank. Sean is the firm's country strategist for China, responsible for developing the firm's view on the Chinese economy and equity market as well. So Sean also leads the firm's Internet Task Force, responsible for coverage of the sector. So before we start the session, a reminder, should you have any question during the presentation, please post in the chat box. Our presenter will respond it after later. So due to time constraint, the question with the most like will be answered first. So hence, click like for question that you think is beneficial. So without further ado, I'll pass the floor to our presenter. Over to you, Sean. Thank you.
Thanks for the kind introduction, Nasri, and good afternoon, everyone. I hope you're doing well in this very challenging times, both in terms of COVID and equity markets. I hope that you're all hanging in there. And I think today we meet and speak about this topic at a very interesting time, because whilst there has been a fair bit of doom and gloom in many sectors or even countries, right, across the world, actually, throughout this time, we have seen the fundamental picture for renewables get actually better, if anything, right? So for today's presentation, I would like to be quite informative and share a lot of useful information to you in your journey for investing. So I'll first start off by talking a bit bigger picture about why we should invest in renewables, right? And along the way, I'll have many tidbits and examples for you to illustrate the kind of opportunities there are. And then towards the end also, I'll have some slides on this Asia Pacific Renewables Fund, which has already just been launched last month, and why you should consider it as part of your portfolio. So let's start then. Firstly, the driver for the demand for renewables is really the fact that climate change is getting worse, right? And if we compare global temperatures from pre-industrial era, meaning the 1800s, it has already risen more than 1 degree Celsius so far, right? And it will continue to rise. So with this rise in temperatures, we have actually faced many extreme weather events, right? Be it, in droughts or excessive rainfall, rising sea levels, and this has created all sorts of problems for food crops, and other human suffering, right? And I'll give you some small examples later on, right? But the point here is that this is a real problem that is facing humanity, all of us, right? And it will continue to get worse with the years ahead. Right? So this is just to show you how even in relatively developed parts of the world, in Singapore, Malaysia, we have faced flooding issues not very long ago, just last year, right? We will all be aware of this. And imagine what would happen to other parts of the world, people who are even less prepared for this, right? So climate change is a real serious problem for many, many countries. Not to mention also wildfires, right? So even though wildfires affect drier climates much more, right? Even just in our part of the world, for me, right across the border in Legoland, Johor, we have observed forest fires not very long ago in 2019, right? And of course, in Indonesia during the drier season, we have farmers burning, yes, but also natural wildfires, right? And you see here children wearing face masks. This is not to prevent against COVID, but really against the pollution from all this destroyed forests burning and so on. So I thought this piece of research was quite interesting. It was actually shared by a relative of mine who's a scientist, a climate change scientist in Malaysia, right? So he mentioned to me that actually, in terms of areas that are most prone to sea level rise, our star is actually one of the most acutely susceptible to flooding, right? To sea level rise. So if we continue business as usual, by 2100, which is like 70 plus years time, we would face up to 5 meters of sea level rise in our star in certain areas, right? And just to show you how serious 5 meters is, right? So the Ministry of Health Manager previously did a field of research where at just 1.2 meters rise, over 200 healthcare facilities will be affected, right? So imagine what happens, beyond that level, right? There'll be a lot of problems. So this is something that we need to fix right now, prevent, right? And unfortunately, we are all responsible for this problem, right? There's no one else to blame. There's no point pointing over the shoulder. All of us are responsible to emitting greenhouse gas emissions, right? And one of the few, if not only solutions in the world right now is renewables, right? And the bad news is that even if we achieve the net zero targets, which a lot of countries are trying to do right now, right? Meaning the countries have committed to not emit excess carbon above what they take out of the environment, right? Meaning no incremental carbon. Even if we achieve these targets by 2050, the bad news is that temperatures will continue to rise beyond 1.5 degrees, right? And most of the climate change damage is irreversible in our lifetime, right? There's nothing we can do about it. We continue to do damage to the environment, and it cannot be reversed in the near term, right? And the best we can do for the future generations is really to limit the further amount of damage that we do. So if I were just to give you a broad picture of where we are in terms of the energy transition in the world, right? It will take a long time for renewables to penetrate a much higher level, but because of where it is right now, there's a lot of growth that we will see from this current level, right? So for example, coal, you can see here this chart, right, on the left, coal took 60 years to go from 5% of the world's energy mix to around 50%, right, at the time. Oil and gas in the middle also took around 60 years to reach around 40% and 20% respectively, right? So as of right now, renewables is around low 10%, right? And will likely eventually reach a much higher penetration than coal, because all these coal plants we have will eventually have to be naturally wound down over time, and this will have to be replaced by some sort of source of energy, and renewables is what we can see one of the only solutions right now. Which is why there's a long tailwind as an investor. If you're investing in the renewables, there'll be a long tailwind, many, many years, 40, 50 years of tailwinds behind this investment team. So why do we say that renewables is now a mega trend, right? is really because of the combination of two main reasons, right? Firstly, because of policies, very supportive policies, and secondly, because the numbers are making sense, right? And that second point is very important, and I'll illustrate why later on, right? So in terms of policies, many major countries have over the last 2 years made historic commitments to achieve net zero, right, by various target dates, roughly on average, say 2050, right? So that's one. They need to figure out how to reach there right now. Right? Secondly, the price of carbon emissions has also gone up significantly, and countries are starting to implement this cost onto companies, right? So where previously there was no cost to emitting carbon, I could, a power plant could just burn dirty coal and probably not be penalized, right? Now there's actually a real cost being put on them, and the price of carbon has gone from around 5 euros per ton for a number of years to actually much more than 60 euros per ton right now, right? So we are seeing this starting first in Europe. China is looking like it's gonna follow along quite closely quite soon as well, and then more and more countries will over time implement this. Lastly, something more near term is that since the Ukraine and Russia war started, we have actually seen a very concerted effort by governments to gain energy security, especially in Europe, right? So Europe is the prime example where they need to gain independence from Russian gas, right? So before 2030, and they will do so by doubling renewables capacity to the incremental capacity to 900 gigawatts, right? In fact, this number recently was further increased, right? So, and Europe is big, right? It's 15 to 20% of global demand for solar, for example, right? And this is just Europe starting off. So why is it so important for energy security? Because once you actually build a solar plant, wind farm, right, you actually don't really need to buy additional feedstock to run the plants, and this really gives you sort of a bit more control to your energy needs. And this is also very important because, as I mentioned, the the numbers have to make sense, right? So here you can see in the middle chart, the cost of solar modules, right, has fallen significantly from the early days, right? And if I just look at a bit closer, say year 2000 onwards, right, it has fallen from close to $5 per watt to less than 30 cents per watt here currently right now, right? And this is very, very cheap. So with thermal coal prices having gone up so much as well, right? Actually, in many parts of the world, if not all, so building a solar plant is actually much cheaper than running a coal power plant, right? If you were to invest incremental money. So because the numbers now make sense for both actually solar and wind, right? We are seeing these two technologies. I would term them as technologies, right? Just like how we talk about internet technologies, blockchain, and so on. Solar and wind, hydropower, nuclear, all these are also technologies, right? All this, especially solar and wind, we are at the point where we will see a much accelerated growth going forward, right? And we're coming off a very low base where these two technologies are still only around 5% of the global energy mix. If you look at the chart here on yellow and green, you can see how minuscule they are currently compared to all the other sources of energy, such as coal, oil, and gas, right? So that gets me very, very, very excited as an investor. So this chart basically illustrates to you how resilient the demand for renewables is, right? Because even in a year such as 2020, where the world was basically shocked by a once-in-a-lifetime healthcare pandemic, right? Governments were not really prepared, with everyone being locked down. Even in such a year where nearly everything was down, right? Renewable investments actually continued going up, right? And in fact, made new highs subsequently the year after, right? And the growth rate, as you can see, even picked up. So this really shows you how resilient the demand is for renewables, and we expect this number in terms of investment amount per year to double by 2050 or more, right? And all these areas where people are investing in, right, where companies are putting money to developing carbon capture, hydrogen, nuclear, heating and EVs and so on. All these areas are all areas of investment for the fund that we have just launched, and areas that we want to invest into and benefit from this green transition. So why is Asia so important to renewables, right? Some people think that is Asia is a bit too narrow, right? Actually, you'll be surprised to know that if you look at the chart on the left, Asia, the red portion, is actually more than half of where global renewable investments are going into, right? So as a destination of investments, it's huge, right? And the China market is huge, as I'll show you a bit more later on. And a lot of these companies are also that we have in Asia will benefit across the global supply chain, right? Because basically these companies in Asia supply to developers and so on across the world, not just in Asia. So at this point, I would like to talk a bit about the fund, and don't worry, I will have a bit more information for you for in terms of investments more generally and so on. But I just wanted to make a segue to talk a bit about this fund that we have just launched and why is it so compelling, we feel, right? So firstly, it provides a very good exposure to what we feel is we have very high conviction on, which is the global demand for renewable energy and sustainability solutions, right? So this is something we feel very strongly about, and the fund is right at the front and center of this. So why Asia? Because Asian companies, especially in certain specific technologies or sectors, right, such as solar, electric vehicles, and so on, we are actually global supply chain leaders, right? Our companies are globally leading. We are competing globally, and they are poised to benefit from anywhere in the world, right? And yet, at the same time, a lot of the stocks have very attractive valuations compared to developed markets, and as I will illustrate later on, a lot of them are also profitable, right? Unlike maybe some concept companies or loss-making internet companies, these are actually profitable, growing companies, right? And trading at attractive valuations. So that is why we see the opportunity here, right? And at the same time, for this fund, we also have the opportunity to invest up to 20% in the best global renewable companies globally, right? And I will just say that firstly, in terms of our ESG methodology, we are focused on investing in companies that will benefit from fighting climate change, right? And we are not, and we believe that doing so, we will generate very strong real returns for investors, right? We are not about rating companies and using them to invest accordingly, but we are really focused on the environmental part of the equation, right? And we have also said that we will make some exclusions to certain areas that we will not invest in. Right? So the fund basically its objective is to achieve capital appreciation over the medium to long term, right? And we will do so by investing at least 70% of our assets in the equities of renewable energy companies. I will give you a universe later on of the types of companies we invest in. And the remaining up to 30% may be invested in any particular sector just for diversification. Right? In terms of exclusions, we have said that we will not invest in companies with more than 50% of assets in either coal or crude oil production or thermal power generation. So these are the dirty parts that we think needs to be eventually wound down. Right? So this is the investment universe for the fund. Right? I would encourage you to think about it as across the supply chain, right? So in terms of certain technologies, for example, solar, we can invest across the supply chain from upstream materials, meaning the raw materials that are used to build all these components. We can start investing from that level or all the way down to the final product, right? As well as the customers that are buying them and building all these solar farms, right? So they all are driven by slightly different drivers at any point in time, but the overall pie is growing, and as fund managers, it's our job to figure out at what point in time which part of the supply chain we want to invest in. Right? I will also say that this we will look at this across all the other technologies such as wind, nuclear, hydrogen, electric vehicles and its batteries, right? And we also invest in companies that help other companies be more efficient, right? That provide more efficient solutions to more energy efficient solutions to other companies, right? And so on and so forth. Also, companies involved in pollution control, producing plastic alternatives, right? Waste recycling, and so on and so forth. So the purpose of this slide is to show you how broad the universe is and the many different areas, in terms of sustainability areas that we can invest in. And for this slide, it's really just to show you the fact that how this is really a very developed and mature investment strategy globally. So if you think about renewable investing, in this part of the world, it's a bit people are maybe a bit less familiar, right? Most people are more used to very generic funds, right, which invest by geography, right, be it a emerging market or global and so on and so forth, right? But globally, it's actually a very mature strategy to invest into climate change and renewables and energy transition and so on, right? So, but however, most of these funds are quite focused on developed markets, and no one has really, I think, captured the real opportunity in Asia well enough, and that is why we are quite excited to be launching this fund at this point in time. So I put this chart here to show you how what is really driving the performance, right? So I intentionally didn't include the recent drawdown, but I would show you the drawdown later on in the later slide. But this is just to make sure that you don't lose the big picture when you invest, right? Because what is really driving this 40 to 60% outperformance for these renewable funds over MSCI World over the last 5 years is really the fact that momentum in combating climate change has picked up, right? That is the key reason, the momentum in combating climate change, right? And we expect this momentum to continue. In fact, as I mentioned at the start, if anything, we have been seeing more and more good news coming out across the world in recent months, right? And the fundamental picture is getting better for renewables, right? So these funds would have returned, in excess of 10% per year over the last few years. So then someone might ask, why Asia, right? Because for Chinese companies in particular, they have basically dominated the solar supply chain, and solar is a technology that we feel very excited about, that we are seeing increasing traction, right? So solar companies, for example, produce between 80 to 95%, depending on the components of solar modules. Right? Also, over 40% of the installed wind capacity globally is in Asia, and we have some very big turbine manufacturers or even wind or even just turrets and so on right here in Asia. Right? So this is solar and then wind, and for electric vehicles, we also have globally leading companies in, I will just name two, such as LG and CATL, that are really at the forefront of battery technology. Right? And lastly, let's not forget that we are actually the part of the world that produces half of the world's global CO2 emissions, right? So likewise, when we go through this energy transition, there'll be many opportunities to invest in companies that will benefit from it. So I will not go too deep into the specific names here, but I just wanted to show you that in terms of this portfolio that we have launched and is already live, how diversified it is, right? So in terms of subsectors, right, we have, for example, invested over 26% into renewable energy, right? That is conventionally known, right? And then the rest we have diversified into various sustainability themes, right? Such as energy efficiency, right? Electric vehicles, right? Technology enablers such as the digital paper, right? Which helps people to save paper, right? And commodities and so on and so forth, right? These are commodities that are driven by the drive for renewables, right? So as you can see, it's a very diversified portfolio, right? And we have put down some of the names we like. I'll show you the performance later on. Right? In terms of country allocation, this is not it's not intentional. We don't intend to build a portfolio based on certain exposure to certain countries, but it's really the bottom-up ideas that we have, combined with our risk management overlays and so on, that have resulted in this allocation, where we have around 1/3 in Hong Kong, China, 25%, a quarter in ASEAN, and the rest across the rest of Asia, as well as US, Europe. So this is just to show you what we're investing in China, because I know China has been going through a tough patch, but actually China has been starting to recover very recently in the past weeks, right? And this is just to show you that we are true to the motto, and we're investing in renewable companies in China, right? And these companies are not really driven anyway by the China economy, but really by the global demand for renewable solutions. So these are the stock price performances of some of the names I mentioned previously, right? So I have liked these names for quite a long time, right? And you would see that very interestingly, even in this very difficult market environment, where Asia is down over 10% year to date, right? Actually, a lot of the names here have actually done very well, right? A lot of them are actually flat to up year to date, right? And there's one company here that has gone up multiple fold, right? So over 1 year, right? So the purpose of putting this slide here is not to show you, or we made such a great call. No, it's to show you that in this difficult environment, investors are discerning, and ultimately people will want to buy, make use of this market correction or opportunity to buy the best companies that will benefit from, that will do the best going forward, right? And this is the best indication because in the correction, you want to be buying the best quality visible companies going forward. And that is why investors have started to going into, buying into all these renewable energy companies. Right? So I also get this question quite a lot. So, we know that interest rates will go up a lot from here, right? How will this affect renewable companies, right? So firstly, I want to emphasize that renewable companies are different from loss-making tech companies, right? We are firstly significantly cheaper in valuation. If you look at price to book, price to sales, right, price to cash flow, and you compare the renewable fund on the left to the global tech fund on the middle, you will see they were much lower in all respects, right? And I didn't put a PE because firstly I don't know this fund's PE, and they may not have earnings, or earnings may be depressed, right? But we have a real earnings, right? And our debt level is also low, right? In fact, we are slightly lower than the overall MSCI Asia benchmark. The valuations are slightly higher than the generic Asia benchmark because we don't invest in any material way in financial companies, right? In banks, right? Banks tend to be trading at a low valuation for, I would say, sort of good reason, and it has been quite a difficult environment for many banks, right? Until recently, right? So generally, valuations is not the concern for renewables, right? And it shouldn't really affect, interest rate shouldn't really affect this, right? So long as the fundamental case remains strong, right? So with this, I wanted to then move on to a bit more, to give it more color into specific areas, right? So this is a slide on China, right? So China is also going through this energy transition, right? And it's moving very aggressively, right? Sort of leading the way for the rest of the world, right? So if you look at the chart on the left, the composition of energy, right? Coal used to contribute close to 60% not just 2 years ago, right? Of China's energy mix, right? And the target is to move this renewables contribution from a much lower level, slightly over 10%, right, to over 80% by 2060, right? So because of this, the amount of capacity that is being installed will be growing over 5 times and 10 times, right? For whether it's for wind and solar by 2060, right? And this is the opportunity you want to cover, that you want to capture, right? So as these two technologies start to go mainstream, right, and start to be deployed very rightly, whether in China or globally, we want to be capturing this growth because it's something that is right here and now, right? It's not about concepts. It's not about hype, excessive hype. This is something that is actually doing very well right now, and we want to be investing, to capture this growth right now. Specifically on solar, which we are very excited about, I just wanted to give you a sense of the companies we are investing in, right? So for solar installation, for example, big picture is going to grow over 25% this year, right? In fact, for China, this number for this year is actually going to be higher from our latest. It will be revised up probably to 80%. 80% solar growth in China this year, right? And some of the companies we're investing in, let's call them Solar L, right? This is the world's largest solar company, listed right here in Asia, not anywhere else, right? This is a company that has 40% market share in one of the, I would say, more difficult areas of solar manufacturing, right? There's some entry barrier, and this company has a history of technology innovation, right? They have done many industry firsts, right? And so this company will basically grow in line with the industry volume growth, right, which is over 20% per year for the foreseeable future. Let's say the next 5 to 10 years, right? And it's a profitable company that has a very healthy return on equity. And so therefore, both the revenue and profits are actually growing in line with this whole opportunity, right? And it's a very, very good proxy to, the overall solar sector, right? On another component within solar, we look at inverters. This is also the largest inverter company in the world by volume, right? And I'll just summarize this by saying that it has a 30% market share and one of the highest ESG ratings across all companies, right? Not just renewable companies, all companies in Asia, in China, right? It's also profitable and growing profits at over 40% in the next 2 years, right? And all these companies are all trading at a very reasonable valuation, right? They are not trading at 50 times PE, for example. They're all 20, 30 times, for example, right? On commodities, I would say that something we like is uranium, right? So this is a fuel to nuclear. So nuclear has gone through a very tough many years, right? And actually, right now, as we speak, there's sort of a renaissance coming up. Governments are realizing that nuclear energy is a necessity to make this energy transition. And also, very importantly, the technologies that we have right now for nuclear are actually much, much, much safer than before, right? It's not like you think about Fukushima or Chernobyl. It's very, very different, right? There are many more fail-safe mechanisms and things to make sure accidents don't happen, right? And so far, China has been very successful in building nuclear, right? It has had many, many plants and it hasn't had issues so far. And they develop on time with very little delays, right? So nuclear is also one of the cleanest energy sources we have, right? So the commodity we like, I would just say that the supply and demand picture is very, very positive. And we think that, this supply demand picture cannot be reversed in the near term. So it's very visible. And so we want to invest in the commodity. In terms of electric vehicle supply chain, I will just, this is just to give you a sense of how fast electric vehicles are growing globally, right? So this is globally, we are growing over more than 20% per year, right? If you just look at 2021, right? In terms of electric vehicles, as a percentage of new vehicles sold, right? As a percentage of new vehicles, it was around 5.6%, still very, very small, right? So that is precisely where the opportunity is, because eventually, I would say most of the cars sold, right, will be electric vehicles once we have sufficient infrastructure, once the costs have come down sufficiently, and so on, right? So, and if you look at the breakdown of the car sales here, you will notice that China, one country alone, right, is already close to the electric vehicle volumes sold in the whole of Europe, right? And let's not forget that Europe is one of the countries at the forefront of electric vehicles as well, right? And China is going to take over Europe eventually in a few years' time, right? So a lot of the companies we are looking at, they are the ones that are benefiting from this growth, whether in China or globally. And in fact, the China market is really dominated by Chinese players, right? So we believe also that these Chinese players will eventually start to dominate and be much more prevalent, right? So now you and I may be driving, a European car, a Japanese car, and so on. In the future, when it's electric cars, I think it's more likely that we will be driving Chinese cars, much more than we are right now, right? So let's call this company B, like listed here in Asia, is growing car sales over 90% this year, right? Over 90%. Where else can you find this kind of growth, right? And it is also is developing a new battery technology that is gaining adoption very quickly, and again, it's profitable. It's a profitable company and growing profits at over 20% per year, right? So my intention of putting all these examples here is to show you how, to give you a bit more flavor into the stocks we're investing in and why the fact that renewable companies are very different from loss-making, expensive, speculative tech companies, right? Here, I will just flash very quickly the fund details before I conclude my presentation. I will just mention that the fund is already launched, right? And we have intentionally kept the initial minimal investment size quite small to make at 100 ringgit, right? To keep the fund very accessible for everyone, right? And the rest of the information you will require, please contact your salespeople, right? That you know of, right? Or let us know if you need help. With this, I would like to conclude my presentation and pass the floor back to Nasri. Thank you.
All right. Thank you, Sean, for the sharing, for the insight on the renewable funds. So before we proceed to our Q&A session, I would like to share some of our ongoing campaign that is actually running now until end of this month. Let me share the slide. All right. So guys, if let's say you have any intention to invest and taking the opportunity of our new funds and also any other funds that available in our platform, regardless whether it's EPF member investment scheme or cash investment, you can start investing as low as 2,000 ringgit to participate in this ongoing campaign. Just key in the promo code get extra. So I repeat, get extra in one word. You will receive a reward based on tier. Up to 4.88% per annum. The lowest will be 3.88% per annum, subject to terms and conditions. So I guess taking the opportunity of the current situation where the market is actually, I think, cheaper as compared to a year before, you might dollar cost average, or for those that new to invest, you can start as low as, even for our new funds, it's actually only 100 ringgit. So I repeat, you can benefit from EPF savings as well, investment, and also cash investment. Just make sure that you key in the promo code get extra, the promo code GETEXTRA. All right, so that's about it. Let's go to the Q&A session. So Sean, there's a couple of questions posted here. The first question is, as you shared in the slide earlier, right? One of the country that we are focused is China. So how does China government subsidy affect the exposure of companies to invest in?
Sure. Thanks for the question. So firstly, I would say that in many of the segments I look at, right, the subsidy rate has been coming down, right? So I would say that for solar and wind, actually, we haven't really benefited from subsidies in China, right? For electric vehicles, there has been subsidies, but it has been coming down every single year, right? And even this year, it has come down, but the growth rate for electric vehicles actually surprisingly went up even more, right? And beat expectations. So just to give you an example, as we speak, just right today, the data just came out that the electric vehicle sales for May in China was up 120% year on year. Right? That's why the market got so excited today about electric vehicle stocks. Right? So I guess to summarize, the response is that the subsidies have been very low, if anything, and we are not really driven by subsidies. Right? And we, in fact, if anything, the policy direction for renewables is very clear. It's only being supportive. Right? The China government is not trying to clamp down on renewables at all in any way.
All right, thanks, Sean. So we have a second question here, concern about ESG. So as you know that this fund is actually investing in ESG. So what rating or metric used to evaluate these companies, especially in China?
Sure. So as you would have known, ESG is a very complicated subject. It's not just about ratings, because ratings are also very subjective, depending on which rating agency you talk to, and of course our internal ratings as well, which we have, right? So it's a balance, right? We look at many facets when we decide to invest, right? We look at the fundamentals of the company, we look at the earnings situation for the company, right, and the momentum of the earnings, and we look at the valuations, right? And then we overlay this with our ESG considerations, right? Whether this passes a certain level, whether the ESG score is improving, right? And whether there are any potential ESG issues we foresee, right? So I would say that if you ask me what specific ESG issue I would focus on for renewable companies, I would say that every company is different, right? But more likely than not, given that they are already very strong in the environmental aspect, we will probably be looking a bit more whether there are any social or governance issues, right? But I want to be very clear to everyone also that we cannot assume certain issues or certain ratings will definitely affect the company's share price, right? At the end of the day, investors and the market, everyone is the market is mature enough to know that not every single issue matters, because no company in the world is 100% perfect and pure. Yeah.
All right. Thanks, Sean. Okay, a last question because we are running out of time. So this is last question. In terms of the country, right, in Asia, I guess apart from China, what is other country that leading in sustainable?
Sure. So we do have certain companies in Korea that are wind related, right? Korea also has certain companies that not just in wind energy, but also in hydrogen, right? And for Southeast Asia, we have a number of companies that are investing into developing these renewable energy companies, right? So, for example, when we need to build up all these solar farms and wind farms or any other like geothermal plants and so on, there needs to be someone that invests in this, right? That funds the project. And there are actually many companies listed in Asia that also are funding these projects, and they are able to generate a reasonable return, right? So it's our job to find the countries that want to be invested in, right? But generally, the opportunity for these companies is growing, right? Because there are many projects available, and the returns they get are also reasonably attractive, right? So that is why these companies have over time actually done quite well as well, right? So besides China, Korea, I'll also mention Southeast Asia.
All right, thank you, Sean. So I guess that's all for today. So thank you, Sean, for sharing your thoughts and also your insight about these funds and this area as well. This is new to us. Even it's new to me as investor as well. So I guess for those that have any question, you can always email to us at service@principal.com.my. Thank you, everyone. We appreciate you being here. Take the opportunity to invest in our Principal Asia Pacific Renewable Funds. You can start as RM100. And most importantly, start your investment journey with Principal. Thank you again for joining us today, and we shall see you again next time around. Take care and stay safe. Bye-bye.
Thank you, everyone. Bye-bye.